think about all the headaches financial advisors that you and I know that, they go into kind of like a dark period in March and April and they're like, can't take any meetings, looking at clients, looking at taxes. Everyone's, Excel spreadsheets are out and trying to calculate everything. And then, yeah, AI can easily help with that. Again, not it's not filing anything, but it's preparing the FA and client conversation, which just makes our FAs look even better and helps build that rapport with the client.
If you're in this for the next 15 years, you're going to see more money come your way to manage than any of your predecessors have. Welcome everybody to In the Flows. I'm your host Yasu Asayas, and I'm with special guest Nisheet Patel, our very own Inflows contributor. Welcome, Nisheet.
Good morning, Yasu. Zooming in from New York. It is like 0 degrees outside, so I'm glad to be inside and chatting with you.
Yeah, it's great. I'm out here in the San Francisco Bay Area, and it's pretty chilly out here too at 60 degrees.
Stop it.
So
Yeah.
I might have to put a sweater on.
You might have to put on a Wall Street vest on. Yeah.
Yeah. So I'd like to welcome our audience members to our first episode. And it's funny, Nisheet, I was trying to think about what to say as part of like the catchy intro phrase. Is it, capital and influence and advice and like what are those like
All those
key
buzzwords.
gravitas words? Yeah. So like, and I don't know, I couldn't figure it out. So
We'll come up with
I'll
something.
just talk. I'll talk about it with the sheet and try to figure it out.
Yeah.
Like the Wall Street Journal has in their Wall Street Journal podcast, it's where money, power, and business meet. Right. And I was like, oh, that's so good. That's so good. We got to come up with something.
We'll come up with something.
Yeah. I was leaning towards advice, but then the show is not about. We do not give investment advice on this show. It's just purely for educational purposes. But I was thinking about putting advice in there, and then I put my compliance hat on, and I was like, okay, the compliance guys would freak out if you.
Yeah, don't want that.
We'll figure it out. Yeah. So we want to welcome the audience to our first show. We had a practice run last week, which was pretty good. It was great to have you on the show and just kind of get the vibe from you, Nisheet, and see how we go back and forth.
Yeah.
And
I had fun.
I think, did you have fun?
Yeah, it was great.
Yeah. I think it was pretty interesting and kind of funny. Most folks won't see this, but I had this like great idea to just use this teleprompter and talk about what happened this past week, which I will do, but it was more scripted. And so watching it through the editing process looked pretty bad. It was one of those things that she was like, look, you might as well just be a news.
Yeah. Well, I mean, it's hard. Look, not everyone knows teleprompters or used one. I've never used one or seen one. So it's something I underestimated, and yeah, we'll get used to it.
Yeah. So we're still going to keep the format where we do a weekly recap of what happened in the markets, but not only the markets, what also happened in the investment advisory world. So, if you're a wealth manager or if you're a financial advisor, we'll be covering topics that you care about. And if you're just, somebody who's listening in and you're not part of the registered investment advisory space, or you're not a broker dealer and you're just kind of a do it yourself, average Joe or Jane, this show's also for you. So you'll learn some new things, and feel free to hit a like and subscribe if you enjoy the show. All right, are you ready to dig into this week, Nisheet?
Yeah, let's do it.
Yeah, it's funny. I would love to start backwards, but let's kick it off on Monday. So Monday we saw gold just break through, actually just smash through 5,000, and I mean these are kind of record numbers, and it was pretty astounding to see one of these metals just going through the roof, and it wasn't just gold, actually, it was also silver as well. And
silver's had even a more significant run up last month or so.
Yeah, and just, I mean, what do you like? Tell the audience, like, what do you think? Why do metals go up?
Yeah, I think it's twofold. In the old days, metals were your safe haven. You're more conservative. You didn't want to be cash. You wanted some kind of physical asset, especially during times of geopolitical risk, financial government risk. People would always say, look, for hundreds of years, gold has been the standard for everybody. It wasn't, what was it, like the 60s or 70s when the dollar came off the gold standard and the dollar became kind of the world's currency. But people are always going to go back to gold. I think for a while it was always a safe haven. I think what we're seeing more recently, though, not quite a meme investment, but folks are definitely looking at gold and silver for sure. I think the SLV ETF definitely has turned into like a momentum play. You can argue that, yeah, there's obviously geopolitical risk, but things have been worse before, and gold has not gone over $5,000. I think this time around, we still have a debt and deficit at the federal level. There's always going to be hotspots around the globe. Nothing to me has really changed that significantly from before. So I do think, sure, there's a safe haven for gold. I think the run up in silver is even more showing of like a momentum trade. And so I think it's a mix of both. I think there are definitely people that typically might be buying, 2x NVIDIA ETF or crypto ETFs, and instead they're buying, GLD and SLV.
Yeah, is this one of those like meme stocks, but now it's like meme asset, right? Like,
Yeah.
do we have to go to Wall Street Bets, the subreddit, to check out what's going on here?
We might have to go on the Reddit and see if GameStop is also heading up with gold.
Yeah, the other thing to think about is with the geopolitical risks you're talking about, you're seeing the dollar kind of dropping, right? And
Mhm.
so, folks are like, what's the safe haven after the dollar?
Right.
They're like, metals, gold. Like,
Yeah.
let's just put it in gold. And
Yeah, it's definitely, yeah, like I was saying, it's definitely twofold. I mean, people are worried about tariffs. People are worried about what's happening to the dollar and the yen and other things. But I almost feel like there's extra juice behind this with some retail momentum trades too.
yeah, yeah, for sure, for sure. And I'm kind of wondering also, I should check this out. What is Bitcoin? Bitcoin's getting crushed right now, actually. So it's 83,000. So basically folks are like, all right, well, tariffs, they're thinking a Fed who's going to lower interest rates, which would increase and hopefully not add more to the money supply. But, what do you do in those cases? At least
Hmm.
the Wall Street bettors would have bought more Bitcoin.
Yeah, and
I
I
think
think you
Michael
would have.
Saylor probably bought some more, but
I'm sure. I think you would have seen Yasu, like, what was it? It's 2026. I mean, just even a year, or 2 years ago, 3 years ago, people would have been buying Bitcoin instead of gold, and now they're buying gold. And so I think that definitely is something to keep an eye on. You know, gold being now the safe asset, the non-correlated asset again to the markets, to the equity markets, where we were being told last several years that no, the future gold asset is now Bitcoin, and then you're not seeing that trade.
yeah, yeah. So next time you go to a wedding, be expected to see a lot of gold watches and chains
Gold
and
watches, all
jewelry.
my Indian aunties are happy that they're sitting on gold. Like it's skyrocketing. They're all showing off about gold. Yeah.
Yeah, the other thing that happened, so classic risk off vibes that are going on, and I think the other big thing that happened was that Medicare proposed payments for 2027, and I think it was just like instantly $90 billion of market cap was just like vaporized. Like United Health and Humana, I think United Health was down like 18% in one day. So, we're seeing, and for those that don't know, every year the CMS sets rates for the Medicare Advantage program, which is basically like the private insurance version of Medicare. I mean, it's bundled, includes like Part A, Part B, and Part D. And insurance companies are used to seeing, modest growth in what they're able to get back from the Medicare Advantage programs, and the CMS sets those payments rates, and they set it flat. They were expecting modest increase,
Sure.
5%, 6%, but it went flat, and then instantly you just saw this market cap like vaporization happen for United Health and some other insurance players in the space. So that was actually a pretty big story on Monday.
Yeah. For me, like healthcare stocks, healthcare industry is not my bag, but that logical flow each year. We always hear like our country's healthcare system is so expensive. There's so many flaws with it, and part of it is the market makes money off of the hospital system, and these publicly traded health insurance companies they base a lot of their revenues on what that cost is. It's almost like we follow the NBA or NFL. There's a salary cap, right? The salary cap goes up, players are happy, they know they're going to make more money. In this case, the salary cap stayed flat, and that is not good news for these companies that rely heavily on Medicare payments. So, not surprising to see. Well, it'll be interesting, see what happens later this week into next couple of weeks. If the fundamentals are still there, do these companies bounce back, or is this something that's kind of a hangover for the rest of the year based on what projected revenues could look like?
Yeah, I think also just, the US government was concerned about just Medicare fraud. So a lot of these I think the Wall Street Journal was the one who actually broke the report where, they figured out that the doctors who were tied to these health insurance companies were either, just they were either prescribing visits, or sorry, indicating visits, and then charging for them when there was no medical care given, and it was in the billions of dollars that they kind of figured out was falling into that whole like fraud realm. So I bet you anything like that played into the decision to stay flat, right? It's
Yeah,
like,
no, it's hard to see. It's hard to uncover some of that stuff, right? If you're really, unless you're really in the weeds. So for sure, I think some of it was protective and trying to make sure it doesn't happen again, or at least
yeah,
minimize it.
right. I mean, yeah, you're tightening your belt, and I think the administration is thinking a lot about waste and fraud. So why not?
Yeah, in all shapes and forms.
Yeah. So then we hit the midweek, and there was some pretty big news with the Fed. Jay Powell and his governors decided to hold interest rates, so keeping them steady. And they were saying that there's inflation is kind of stuck, but we're not really uncomfortable with how employment numbers are. And so, I know this administration wants some lower interest rates. They're eager to get the governors to vote to cut. But from what the Federal Reserve is seeing from their data, it's better to just stay flat. So that was a big one Friday. We'll talk about the Fed later after this little segment a little later. But did you catch that one on Wednesday?
Yeah, I saw that. Markets kind of, I thought maybe dipped a little bit, but stayed steady, which was a good sign. And I think for most people paying attention, it's good news to see that Fed rate is flat, only because it shows that they do believe the health of the economy is relatively strong. You don't want stimulus with lower rates if we don't need it. Now, I get the flip side of this. Folks are still clamoring for lower interest rates to maybe jumpstart the housing market, to help alleviate what looks like record consumer debt in this country. Um, so we'll just have to see. I think it's like a lot of things this year, last 12 months, 14 months. It's been two sides to every economic story, and right now the Fed believes like rates are good to where they are. We'll have to see if that turns out to be true.
Yeah,
But I'm
we'll
glad the
see.
market didn't come down significantly or crash. I think the market is smart enough to see that there are pockets of strength, growth, and that maybe they're seeing what the Fed's seeing as well.
Yeah, I learned this lesson the hard way, early on in my career, which is don't fight the Fed. So,
Sure.
they want to set interest rates the way where they are. Don't fight it.
Yeah, there's nothing
Work
political
with
about that
them.
math. So let them do what they need to do.
Exactly. Yeah, the other slightly big news was that Amazon is looking to invest 50 billion into OpenAI. So, yeah, I think that hits the valuation for OpenAI at around $800 billion, which can we just talk about this? Like, I just don't understand how how this is working because
Sure.
you got a company like OpenAI who's raising money, and sometimes the money is in cash, but a lot of that the time the money that's being exchanged is not really money. It's like credits for the servers, and
Yeah,
so you
it's
get
like
these,
orders.
yeah, yeah, and so I just to me, I don't know. The math is not math in the sheet,
Yeah,
and I wonder how folks are looking at these expenditures from these really large tech companies who are cash heavy,
yeah,
and just seeing how, what's going to be the return on invested capital here, guys? Because it's getting weird to me.
yeah. Well, the Amazon thing is interesting to me specifically. Let's take Amazon first, right? They already have a significant investment in Anthropic, which people would say is a direct rival of OpenAI. So it seems like one, maybe they're diversifying their bets. Two, they just announced significant layoffs this week at corporate home office. So on one hand, they're going to lay off 15, 16,000 people, and on the other hand, they're going to invest $50 billion in this technology, the future. And you're right. I mean, look, you're out there in San Francisco. We're not tech bros. We're more Wall Street bros. But a lot of the things that we hear, it's, hey, it's like a cycle, right? You can literally name 7 or 8 companies that are investing in each other, then placing orders with each other. Um, whether it's chips, whether it's compute, advertising, it's kind of like a circle that just goes round and round, and it's hard to tell now if that's is this some kind of new pyramid scheme that's a circle, or is it really investing in the infrastructure? If you listen to Jensen at NVIDIA, he'll tell you no, he talks about like a 5 layer cake, and he's like, it's important to invest in each layer. But I think to a lot of us that aren't in that technical detail level, like it seems to me like you're just passing the buck around the circle. So we'll have to see what this looks like. But yeah, you're right. The numbers are starting to get staggering for OpenAI. I just read the other day too. They're now gonna. I think the Journal reported it. They're looking to come public this year and try to actually beat Anthropic to the market. Um, we'll see more of that. Then we'll see more. For a while, companies stayed private. Private equity was readily available. They didn't need to go into the market and have the headaches of being publicly traded. But I think at these valuations, some of these companies might feel like now it's time to go public.
Yeah, yeah. I mean, at some point, because these companies are investors into like the open AIs and Anthropics, they're going to want their money, right?
Yeah,
Just like we would if we wanted,
sure,
if we were, getting into an IPO or whatnot. I think it gets. I think the one thing to worry about is when you start seeing firms borrowing large sums of money to make these
that's
types
right.
of investments. When they start leveraging up, because I don't know, just over leveraged companies, liquidity crisis. That's what scares me in the public equity space.
Yeah. Well, you bring up a good point. I think a perfect example there was Oracle, where what was it last year? It was one day it was up like 30%, something crazy because of the after earnings and talking about its investment in the AI cycle. But then later on, as they started issuing corporate bonds and people realized like, oh, they're investing a lot, but they're borrowing a lot, that stock came down significantly. So I think you're going to see a test of companies, someone like Amazon that sits on a lot of cash and has a lot of diverse revenues, someone like Google, maybe they'll be okay. But I think you make a great point. Like if the companies that are borrowing to invest in AI are not going to be rewarded as much as some of these other ones.
Oh yeah, yeah. It actually what you just said ties right into what we were gonna talk about next, which was what happened yesterday and today. So CoreWeave, right? They're one of those companies that was heavily borrowing in order to build out, their infrastructure for
Yeah.
artificial intelligence companies and whatnot. And I think they hit a dumpster fire for about a second, and then now they're looking good and stocks going back up and whatnot. But like those are the kind of companies that I would be a little afraid of.
Yeah. I remember when they came public, a lot of folks still didn't understand what they did. I think a couple of times the CEOs on CNBC trying to explain that cycle of who their clients were. Folks were worried that they were over dependent on 1 or 2 companies, including NVIDIA. That's another example of NVIDIA had invested in CoreWeave as well. So it's very incestuous, and you wonder who's going to be the surviving companies, who's not, and where this money's coming from.
Yeah. The other big news, this is talking today. So the president nominated Kevin Warsh for the next Fed chair position, which it's kind of exciting in the sense that you finally get to know who who is it, like who's
Yeah,
the person, right? And yeah, this Kevin Warsh, like I don't have really an opinion on him, and I'm also not
me neither.
a macro kind of guy, but I'm looking forward to seeing the Senate confirmation hearing just to hear what his views
Sure.
are. And again, don't fight the Fed, so he's really important, but there's a governors, there's the other governors that matter as well. But that's the big
Yeah, I think
news.
for us, this is interesting. It's not anything that we talked about back in finance class at school. The Fed's important, and it's supposed to be independent, and it's that independence. I think it'll be interesting to see in the confirmation hearings and what happens. The market wants an independent Fed, and I know they can keep saying they're independent. You bring up a good point. I think a lot of folks may think it's just the Fed chair that makes all these decisions. There's a whole body of people behind him or her, and so the president can nominate whoever he wants. If this person gets through the hearing and is approved, that's great. But the the decision to what to do with rates is still going to be the same. And I think we'll have to see from communications that come out. Minutes are always published. It'll be interesting to see if anything actually sways one way or the other, but I don't think it will.
Yeah. Do you think just after this week's like new highlights, does it feel like there's kind of just two economies going on right now where you have firms who are laying off employees and replacing them with like AI, but then you also have those like kind of same firms who are making like $50 billion investments
Yeah.
into like open AI and whatnot. Is that a signal to you at all, regarding, like, the AI? Is there, like, the AI trade, right? Is it maturing, or are we going to, like, a new phase?
I definitely see it going into a new phase. I think you're just seeing numbers, at staggering heights. But to your question, I do see kind of like, yeah, it looks like two different economies, two different worlds, really. If you talk, obviously people on Main Street are worried about inflation. They're worried about a tight employment market. Uh, the cost of everything is going up, whether it's groceries, cars, energy. Blame whoever you want to blame, or just say like it's the natural kind of cycle coming out of COVID. Like there is inflation. At the same time, at the high end of the market, retail, large luxury homes are selling at record paces. Even from a consumer perspective, it seems like it's two different worlds. And then in corporate America, same thing, right? Like there's companies that are trying to have layoffs and fix their financial balance sheets, but then at the same time make these ridiculous uh, investments in AI. And I think it's definitely an interesting time. It's hard to predict what's going to be there. Could this be like building out the railroads, building out the internet, and then we'll go to a whole different level of productivity come 5-10 years from now. Um, I think that's what people are hoping. That's what folks are expressing. But it's definitely going to be a hard run, at least now, when some of these jobs go away, and it's going to take some time to realize that those productivity gains from AI and technology.
So how would you connect that to the financial advisor, right? How do you bridge that kind of story of what's happening on Wall Street with what's happening and maybe the advisor's client who's Main Street,
Yeah.
and whatnot. So like what would you say to them?
Yeah, that's a great question. I think you go back to there's been a lot of times in the market, you go back to, the dot-com bubble and the 90s tech boom. You have to really separate out your everyday finances and paying bills and your investments and what you're trying to do for retirement. And I think that's where the financial advisor steps in and the power of the FA, where he or she knows the client and that relationship and what's bothering them or what's scaring them. Um, you still have to have your eyes on the long term prize. And so I think from a market investment perspective, an FA is going to say, look, we can't afford not to be in some of these names. Large cap core, large cap growth might be dominated by the Mag 7, but um, we still want to invest if we believe in those companies and the asset managers that might be part of the portfolio believe in those companies. You're still going to do that, right? So even today, I'm still invested in Amazon and Google and Microsoft. Even if I'm paying, record prices for eggs and gas and energy, you need to have that long-term time horizon. And I think the key to that FA client relationship is keeping those two things separate. And FAs are, they're probably nodding their head. They know they need to keep their clients sane when their clients complaining about their everyday bills and grocery receipts, but know that long term, they're in the market and they're doing the right thing with some of these investments, which, hey, could prove out to be great investments and help the portfolio down the road. I'm sure that happened in the 90s and the early 2000s when some of these dot-com stocks went belly up, but others, if you were investing early in Google and Amazon, you're sitting pretty now. So you want to stay in the game, keep your eye on the long-term horizon, while managing your kind of short-term wallet and budget. And I think, listen, you and I both know financial advisors, that's it, that their superpower is the client relationship and bringing that story back to what's on the investment side. So I think they're the right people to be with at times like this.
It's interesting. You said you're invested in your PA. You're invested in like Amazon and Nvidia, and not financial advice. Remember,
Right.
but like it's a good example of if you're a financial advisor, you have kind of two generations that you're dealing with. You have the parents or grandparents or whatnot, who are kind of deathly afraid of AI and it's going to take everyone's jobs away. And Yeah, there's just this like fear mongering going on, but then you have the other younger kind of next gen clients who are like, vibe coding with like
Mhm.
Cloud right now, right?
Right.
So like how do you how do you help them, kind of bridge that for like what's what do you say to the
Well,
advisor? Is it just, sit on my couch and let me give you a therapy session? Or
hey,
like
some
what
of
do you
that's
do?
part of it, right? Yeah, like I'll tell you, in my day job, we run platforms and programs for financial advisors, and a lot of what we do ties into practice management, and we can give a financial advisor all the digital tools they need and all the ETFs and mutual funds and hedge funds they need on the product menu. But I think more than half of their job is really that therapy session with the client, especially when things get rocky, right? When things are going well, probably calling a little bit less and not as worried. But when things are rocky or bifurcated like they are now, you really want to talk to the client. And that FA is going to have to talk to the client, get to know the older generation, what they value and what risks they see, and that's going to be, like you said, next gen client might be slightly different, but take in some of those personal values in the portfolio decisions, and again, just stay disciplined, right? Just stay the course. FAs know that, but that's really where the client relationship is super important, and that's why our FAs are we always value their knowledge and intimately they know their clients and try to put some of that value into the portfolio.
Yeah, it's interesting, Nishi. I didn't tell you this earlier, but I went to this regional event, really small, like get together of financial advisors, less
Mm,
than 10 people or whatnot, and I was asking, yeah, I have an asset management background, so and mainly focused on public equity, so it's always interesting to hear, what are clients asking their advisors about regarding, stocks and whatnot? And, I asked that question to one of the advisors and to your point about portfolios, his answer was shocking to me. He's like, my clients don't care about what's in the portfolio. What they care
mm,
about is when can you help me get that next house? Right.
right.
And so, there's a
Did they say how old that client was?
no, no, we didn't go into their details. It was
Because I
just it
think
was just like a
we
funny question answer.
yeah, funny question, right?
So
Like we've seen and heard, I think, a lot of things where the next gen clients do care about what's in their portfolio, whereas some of the older ones that maybe are close to retirement are just trying to get to that goal. So yeah, that's an interesting answer.
so uh yeah, it was kinda interesting and, shout out to San Francisco, like, the Bay Area has these really cool regional events and get-togethers, so that I'm now, discovering more and more of, so next
That's
time you're
great.
out here,
Yeah,
Nishi, you gotta I'll shoot you the
yeah, that's
invite.
it.
Last week when we were doing our trial run, we talked quite a bit about AI in the financial advisor world, and I think that, there's kinda 2 cases, one where you have the financial advisors who are, kind of retiring and riding off into the sunset, and then you have it's actually like 3, the ones who are, kind of riding off in the sunset, then there's the ones who've been in the industry for, 10 years, 10 plus years and are looking to expand, and then there's, like, the next gen who are just jumping in. And when it comes to AI, the from my anecdotal conversations, the folks who are riding off in the sunset, they don't really care about it. They're done, right? They're trying to
Right.
retire. The ones who are looking to sell their practices or do some M&A or mergers or whatnot, AI is kinda helpful for them because they don't have to hire somebody like an admin to do,
Sure.
scheduling or emails. And the next gen is just, they're just excited to be part of the space and grow their books. But that middle category or that middle class right there that's adopting AI at a fast clip, just what are your thoughts on that? And, like, how are they gonna use it? How do they stay in, SOC 2 regulatory compliance? And just your thoughts on the AI being integrated into the FA's world.
Yeah, no, it's a great question. I think it's something from my seat. I develop and build platforms for financial advisors, and AI is starting to muscle its way into some of those conversations. And think about 20 years ago what a computer did to a financial advisor and his or her practice, or um, home office, back office operations. For me, AI's first step has always been around scale and efficiency. I don't see AI replacing the financial advisor. I see AI as helping with going through a client's holdings, stock holdings, like we were just talking about, and anyone that holds NVIDIA or any of the healthcare stocks. Um, there's been significant market movement or a related story that came out of the home office research side. Let's draft up an email. Let's attach the research report PDF. And I'm going to tee up for you, financial advisor, 8 emails that can go out by 4 o'clock by market close. And you can personalize the emails, but at least those are drafted up, right? Those are, yeah. So when I was in college, I interned for financial advisors all the time. And that's kind of the job I used to do, right? I used to look at statements, highlight stocks, tickers, put a mailing together with a brochure and a research report and send it out. Now AI can do that, right? So from a financial advisor perspective, maybe you don't need as many interns or admin people doing some of those little things, but it's never going to replace the kind of that core understanding of the client. I think AI, what you're seeing is in bits and pieces, starting with client communication, starting with note taking in a meeting, email drafts. So that's kind of the low hanging fruit that I think all the Wall Street firms are going after. That next phase might be something in the back office where it's like, you know, setting up a trade blotter or trying to more actively look for tax gains and losses. No decision making, but just at least trying to find things to tee up those activities for either the financial advisor or the back office trader.
Yeah, I think, one good example is, I was talking to my buddy, who's in the, aggregator world, so his company buys up, shops and
Sure. Yeah.
whatnot, and he was telling me that, when you come to these, like, smaller shops, the AI could be, like, super helpful in whenever it comes to kind of rules-based workflows. So, not saying it will replace your lawyer, but you could create like a Gemini gem and say, "Hey, you're put your compliance hat on. I'm gonna upload all of our compliance documents, and then I'm gonna ask you a question, and you're gonna tell me if I break any rules here."
Mhm.
And that way, you can have that advisor can have a much more in-depth or useful conversation with whoever's running their compliance department, kind of front load the work before it goes to the compliance department, and then kind of get whatever they need, the output, in a much faster rate, or
Yeah.
just basically increase your productivity, right?
That's what I was gonna say, right? It's being safer and being more productive and even more proactive. So in that case, larger wirehouses, we build a platform that puts those guardrails in place for the financial advisor. Smaller shop may not have that platform, and so AI could help them in a lot of these cases. Where again, not breaking rules or doing anything with the client, but I could be building a portfolio, trying to build a 60/40 portfolio, and then AI copilot in Excel might tell me, hey, what you're building is not actually going towards 60/40. You should adjust it, and that's something that we would have built into a multi-million-dollar platform, but a smaller shop doesn't have that. So I think that's where you're right. AI could also help with some of the smaller shops and some of those, preparatory tasks that happen before the client even sees it.
Yeah, yeah, and just to differentiate between just kind of AI chatbots and like agentic AI, which chatbots you basically put input and you get an output, but
Yeah,
agentic it'll automate things. So I think with like an agentic AI feature, you could really boost productivity on the back office side. So if you tell a
sure,
bot like, hey, this is my client's, tax ID, complete all the tax related stuff I need to do.
exactly.
And it goes in there, goes to the IRS website, tries to figure out, potentially what are the payments or returns that the client's going to
Yeah,
get. And you don't have to wait like a month to
right.
get that
Think
back
about
from
all
the
the
back
headaches
office.
financial advisors that you and I know that they go into kind of like a dark period in March and April, and they're like can't take any meetings, looking at clients, looking at taxes. Everyone's Excel spreadsheets are out and trying to calculate everything, and then yeah, AI can easily help with that. Again, not it's not filing anything, but it's preparing the FA and client conversation, which just makes our FAs look even better and helps build that rapport with the client.
Yeah, yeah, and just, again, on top, well, not again, but we talked about this last week and bringing it up again. The future of the advisor and wealth manager is looking really good. There are more, advisors and wealth managers leaving the industry than are joining, and so if you're in this for the next, 15 years, you're gonna see more money come your way to manage than any of your predecessors have. So there's gonna be more money to manage, your less headcount resources, and
Right.
so you're gonna have to figure out the times are gonna force you to be more productive and more efficient. And I think AI can be a really good tool for these advisors and wealth managers moving forward.
Yeah, no, I think about this, I know we're biased, we love the space, but think about this industry where demand is going to go up, supply is going to go down. The folks that are in the space and doing well are going to be well positioned to have almost too many clients. And how do you make up time? You're going to need technology. There's stats out there that show a lot of home offices, including the places where I work, where they're expecting to double their tech budgets over the next just 5 years solely because of this, whether it's adopting AI or having even just old fashioned, more automated technology. Like our job is to scale up the financial advisor and his or her branch and support staff. That's all going to come from technology, right? We're losing bodies. Less kids out of college are becoming financial advisors. Less people are going into the space. So how do you make up how do you make up for that delta? It's luckily we're in this age of technology and AI. We can do it.
Yeah. Yeah, well, we're gonna see. So this part of the show, we talk about what are we looking forward to and what are we a little concerned about for the next week. And yeah, she just what's on your mind? Like, what are you feeling good about going into next week?
Well, positively, I know we touched on this with AI, and I love listening to Jensen Huang talk about the future, and he's very much of an optimist. Some news came out this week around China. I don't know if you've seen NVIDIA stock; it's done relatively well. I think there's been a lot of other noise in the market, but once the market digests this, I think it's a strong sign. He was just out before he was in China and out on TV, even saying like, "Hey, don't consider any China numbers part of guidance because we're still working on it." Well, just a couple of days later, new orders were approved. So that's almost gravy to quarterly earnings. And NVIDIA has become the bellwether stock. So I'm looking forward to what folks are looking at NVIDIA for in terms of price targets, maybe moving that up. We might be a little bit away from earnings, but I'm looking, they should carry some of this AI trade forward, and that momentum hopefully helps.
Yeah, that's great. Yeah, yeah. I think the thing I'm looking forward is for the financial advisors. It's basically conference seasons kicking off. So there's a bunch of conferences that a lot of advisors are get together with their professional colleagues and friends,
Yeah.
and get to hear about new trends and whatnot. There's and there's also some unique conferences that I don't think many advisors know about. So like Kingdom Advisors, which is probably the largest gathering of financial advisors in the United States, and it's
Oh, wow.
very much focused on the faith-based advisors. And
Okay.
my favorite, Future Proof, is coming up
Sure. Mine
in
too. Yeah.
March.
It's coming
So
up. The East Coast version is coming up. Yeah.
yeah, the Miami
So
one.
we'll be
So
there.
if we'll be there. If you've never heard of Future Proof, I'd highly recommend that you, as an advisor, check it out and try to attend. They are
It's
really
it's
advisor
billed as a
focused.
it's billed as the first and only wealth management festival, which I think it truly is a festival.
I definitely get Coachella vibes. I've been to
Yeah,
Coachella a couple times, and I was there. I was like, "Oh yeah, they got the pastel colors. They got the
yeah,
awesome bands performing." But it's really a lot of fun, and it's a lot more relaxed. So it's not your average investment professional conference, and
right.
I think the conversations are a lot more richer when the pressure is off, and you're there to connect with a lot of other folks in the same space doing the same thing as you.
That's what I love about it. I know they started that conference to make it less intimidating and more approachable for people, and it's definitely worked over the last few years.
Oh yeah, oh yeah, and it'll be in Miami in March, and then at Huntington Beach in around August, September time. Anything you're a little concerned about, or um, thinking about
Yeah,
longer
we
than?
touched on it. We touched on it a little bit earlier. I'd say for me again, market driven, and a lot of these momentum conversations that financial advisors are having with their clients, especially next gen clients. I'm a little concerned that the crypto trade has not kept up. When Trump first took office in the second term, there's all this momentum around the crypto president and what he's going to do to kind of help with that momentum of how we look at that as an asset, and even underlying how it can help in terms of financial infrastructure. And I think that's the key that a lot of folks were excited about. But we've seen Bitcoin and Ethereum kind of stall out, and some of that money, I think, is going towards gold and silver. So interested to see uh, if some of that momentum can come back. But the longer it takes, the more worried I get. Where are we not? Are we missing the boat on crypto and where it should be going? And then how that relates to financial advisors, because like we said, like this is a bifurcated market. Momentum is key for a lot of folks, and this is almost, we're missing on the momentum trade. And it's like, are we now redefining what crypto is, or is this just a kind of a blip in what it's going to be? So I'm curious to see. I'm hoping it can catch up to what gold and silver are doing, and maybe set things right a little bit.
All right, there you hear it. Market predictions on crypto. Maybe don't call it a comeback. I think it's interesting. You just reminded me. I think Vitalik, who was the founder of like Ethereum, said sometime last week. He's like, "Yeah, I think we need to rethink this whole thing." So, hopefully they work on it and kind of get back to being what they envision themselves to be. But that's our show for today. I want to say thank you all for tuning in. Don't forget to like and subscribe. You'll find us on not just YouTube, but also Spotify and Apple Podcasts. This is our first episode, so I want to give a big shout out to Nisheet for being the first one
No,
out the
thanks for
door.
having me.
So
This is great. It's
thanks,
our
buddy.
first one. Let's do it.
Yeah. Again, this isn't financial advice at all. If you need financial advice, find a financial advisor. They'll be able to give you the right perspective and walk you through what you need and whatnot. And they're actually very helpful. If you've never used a financial advisor, that's
Yeah.
generally their job, is to be helpful to you. So definitely reach out to them. And it's funny, maybe we'll do an episode, Nisheet, on just this whole financial advice on YouTube, and how a lot of YouTube personalities out there say at the beginning of their show, this is not financial advice, and then they go on for an hour giving financial advice.
Yeah. No, that all started during COVID, and it's still carried through. So for sure, yeah. Listen, FAs are the real heroes out there, and you need to listen to your FA.
Yeah. If you are a financial advisor and you'd like to keep the conversation going, please join us at inflows.com. It's just for registered investment advisors. Broker-dealers are also invited as well, as long as you're a registered affiliate. And we can keep this conversation going. Again, thank you, Nisheet. Thank you to the audience. Don't forget to like and subscribe, and we will see you again soon.